Stocks rose on Friday to cap a volatile week with the S&P 500, the Dow, and the Nasdaq all logging weekly gains. Big moves on Friday came from the tech and banking worlds. However, shares of Amazon fell more than 3% after the company warned of a slowdown in its AWS cloud business. Shares of Snap sputtered as the company once again warned of a slowdown due to a weak ad market. But that does not compare with the struggles First Republic has had. Reports are suggesting that the government has been unable to find a buyer for the bank, and FDIC receivership is nearing. It was just March when shares were trading above $120, but they're now at $3.51. So I ask you, does anyone want to buy First Republic? You can probably afford it. Regardless, the wave of earnings this week has continued to come in better than feared, fueling optimism that the broader market climb could continue as the weight of the evidence points towards an accelerating global economy with earnings growth beating lowered expectations. And listening closely, forward earnings revisions appear to be picking up, not down. But we do have another Fed meeting, and inflation is looking a bit sticky. So be prepared for another rate increase. And if that happens, pay attention to the market action, as we are likely near the end of rate increases. And that brings me to some good news. I made my last car payment. Now, I still owe a lot of money. I'm just not paying anymore. And today we're going to look at one chart, which is the 6-month daily chart undivided as the SPY, and the close on Friday was 415.93. And as you can see here, we're moving up through this channel line with the bottom channel line moving like that and the upper channel line moving through more or less like that. Now at this point here, we're just above halfway between the bottom channel line and the top channel line, so we're beginning to struggle. We started to begin to struggle, say, around this point here, and we just marched on up, but very, very slowly. We had a breakdown at this point, came back down to the 50 EMA and got a reflection on up, and here we are right here, a couple of good days in the market. We're just barely above this previous high here, but we still need to get above this high right there. And we need to get to that top channel line or break up and through the top channel line, and we have a ways to go. Things are a little slow, and they're weakening. Here into volume, not showing you too much other than the fact that in general the volume has been declining, and that's not necessarily a good sign. It's not dramatically slow, but it definitely is not improving to the upside in volume. And here you see the MAC. We have a nice cycle moving on through here. We came on up. The fast line broke down through the slow line here, but we're getting this little reflection at that point. And those can happen often enough. You can see this one right here, and frankly this is another one right in here where the fast line went steady with a slow line, but when you take a look at the price chart, you can see what I call a backside spike. Definitely this point here was a backside spike. Here we had the same thing, more or less, backside spike. So I think that's what's happening here. This move off of that 50 EMA, we're getting that spike up here. I'm not sure how much more this move has to go, particularly with the Fed meeting relatively soon. So, in my humble opinion, we're going to have some more upside to this, but sooner or later I think we're going to roll over as we did in this previous move there and this previous move here. Moving down into the histogram, you can see pretty much the same thing. Also the price rate of change, nice cycle through here, and let's just see if things continue on. Now, I've told you before that when you get to 1, 2, 3 points in a cycle, everybody sees it, and that's when things change. Well, that may happen. I still think we are going to trundle upward in the next few days, but then sooner or later break down. But that's only my opinion. Same thing here in the RSI. Nice cycle moving on through here, but things can change. I like the cycle as well in the stochastics and in the Williams. The Williams had that bounce off of there all the way up into the overbought territory, and it's going to bring the other oscillators up with it, so that too should prove some upside to the stock market. So we'll watch into early next week, but be careful. We have the Fed meeting, and I'm not sure what the reaction is going to be if we get another rate hike. And for today, that's ChewDog Charts. Thank you.